pattern. Every year, inflation figures become vital for policymakers, economists, businessmen and women, and every person in the country. All through last year, inflation rates were in the double-digit range, owing to high prices of food. This was as a result of the flooding that ravaged a lot of farmlands in the planting season during that period. However, since the beginning of the year, inflation rates has continued to hold steady in the single-digit range. According to the central bank, this may remain so till the end of year and all through next year. This is further strengthened by the fact that the government will make available 15 billion naira for farmers for the planting season this year.
Mr. President, I would like to share with you, approve a grant of 15 billion naira to the Bank of Agriculture to be provided to our farmers for the 2013 farming season at one-digit low interest rate for this year.
Inflation figures are usually measured by the movement in the prices of major food baskets. Last year, inflation rate rose to as high as 12.3% in November. In June this year, inflation rate stood at 8.4%. It rose marginally to 8.7% in July and dropped to 8.2% in August. In particular, there was a noticeable moderation of prices in the potatoes, yams and other tuber groups vis-a-vis other food groups.
It has happened. Why? Because of two things. One, money supply has been managed downwards because of the CRR and other things. But more important is that the food basket and the non-food basket. The non-food basket didn't go up that much because the Naira was maintained at its current level, and the food basket because of the harvest.
The challenge still remains how to link the drop in inflation to the current realities of inadequate infrastructure that still hamper food production in the country. The stance of the monetary policy of the Central Bank of Nigeria has significantly reined in inflationary pressures. According to the Apex Bank, the exercise of fiscal prudence and consolidation on the part of the government has yielded salutary results as fiscal deficits have remained below 3% of gross domestic product as of 2012. There are expectations that if the current trend of inflation is maintained as expected, it will provide the relief needed for daily living. Bolaji Akinwale for Channels Television News.
Let's join Mark Ogun for the rest of the day's business news.
Well, thank you, Harriet. The CBN's Monetary Policy Committee is scheduled to hold its two-day policy meeting next week. The 234th meeting begins on Monday, September the 23rd, and ends on Tuesday, the 24th. At its last meeting, the committee resolved to leave the monetary policy rate unchanged at 12% for a record 11th time. With inflation rates down to 8.2%, market watchers expect the committee to ease the monetary policy rate. And in company news, Guinness Nigeria PLC reported a 16.6% drop in its half-year profit before tax to 17 billion naira this week. In a filing to the Nigerian Stock Exchange, the company said its gross revenue jumped to 131.4 billion naira from 126.2 billion for the same period under review. Net assets also rose to 46.03 billion naira from 38.6 billion naira. The stock ended the week at 248 naira. Meanwhile, Capital Hotel PLC has posted an increase in its revenue for the half-year ended June 30, 2013. However, its audited report for the period showed a 10.5% drop in its profit before and after tax. Net assets came in 11.5% lower to 3.02 billion naira from 3.4 billion naira for the comparable period in 2012. And at the local bourse, a volume of transactions rose to 1.5 billion units, valued at 12.06 billion naira, as traders wrapped up activities for the week. The broad index closed in the green, up 0.25% to 36,188.72 points. The market cap also ended the week looking up, rising 0.29% to finish at 11.25 trillion naira. Thomas White gained 24 kobo ahead of Unity Bank and Airline Services to emerge the top gainer. On the flip side, however, investors gave Air Service and DN Maya the cold shoulder. The top three equities were Transnational Corporation of Nigeria, Wapik Insurance, and Diamond Bank, which accounted for 563.97 million shares. And finally, smartphone maker BlackBerry has announced plans to cut 4,500 jobs, which means about 40% of the company's workforce worldwide will be laid off. The Canadian company says it's targeting an approximate 50% reduction in operating expenditures by the end of the first quarter of 2015. The company also anticipates a loss of about $995 million in its second quarter earnings next week. Shares in the firm dropped by 17% after briefly being halted following the announcement. But in August, the company said it was evaluating a possible sale after the lackluster debut of the BlackBerry 10 deemed its prospects as an independent company. And that's a wrap on business news. It's back to you, Harriet.
Thank you, Mark. Next on the news at 10, winners of the men and women event of the 2013 Obudu International Mountain Race to go home with $50,000 each. That's on Sports News. Please stay with us.